Welcome to another episode of Dfi-nancial Friday. Nathan, how are you? We got through episode 1. We are on episode 2. Excited to have you here.
Thanks. Yeah, I'm really excited. It's been a good week.
Yeah, and so we're looking forward to getting into another topic here. And welcome to you guys that are watching. Thank you for joining us. And again, thank you for the feedback so far. We've been really enjoying that and helping us continue to create these shows and content for you guys. All right, so as you guys know from the first episode, we're going to throw in a little bit of market update to get started. But more importantly, the financial aspect of the financial planning aspect of this, right? So such a hot topic right now, Nate, right? Moving out of state for work from home.
Yep.
There's so much flexibility now. There's this idea in the back of everyone's head is, do I save state taxes when I do so? So because I said that, right, my first disclosure today is that we are not your tax professionals. And these are going to be something that we're talking about from a general education standpoint. And if you have questions specifically about these tax scenarios, let us know. We can help with some referrals to tax preparers, but also contact your tax professional to be able to ask that question as well. So we're going to help with the questions to ask. We're going to get you guys to understand what you should be looking out for, but ultimately still talk to your tax professional. And in general, right, as we discuss these topics, we're big on education, as you know, right? So this is for general education. It's not personalized financial advice. And again, if you're looking for that, reach out to us directly, and we will work on that with you. Okay. All right, Nate. It's a big week, right? We're getting closer and closer to the election. I think the nerves around our client emails, we can sense it, right? We can sense this kind of like, I don't know what to do with my money, right? So give us a little bit more of a sense of what you're seeing this week, and take our watchers and viewers through what you're seeing.
Yeah. As you mentioned, election is less than 2 weeks. Kind of crazy. I think everyone is really just excited for it to be done, to be honest. Yeah. I mean, it's been a year in the making of headlines. And so just kind of knowing who's going to be our president for the next 4 years itself, regardless of who wins, I think is going to be super helpful for the country. So yeah, election's less than 2 weeks. So we touched on some of that last week. The thing I thought was most interesting this week actually started to come out of some technology earnings, right? So the COVID shutdown happened. A lot of technology companies were able to keep everyone employed. People are just working from home. And so obviously a lot of these companies saw huge upticks because of the COVID situation, right? Everyone's on Zoom. So Zoom had something like 4 times revenue, this year compared to last year. Everyone's at home so they can watch Netflix and HBO Go and Hulu and all these other channels. And so there was an uptick in subscribers there too. So the thing I noticed this week is with Netflix earnings. So Netflix earnings came out on Tuesday. Unfortunately, they missed their subscriber growth numbers, but they actually are looking very strong from a economic standpoint, right? Everyone's worried about, hey, they're creating all this brand new content. It's super expensive. They're just going to be losing money hands over fist for a while. And as an investor, you just got to be okay with that. Well, surprise, they're actually on track for, potentially $2 billion of profit. And so I think that's actually something that we're starting to see be symptomatic of a lot of these tech earnings that we're seeing come out this quarter, is maybe that COVID uptick that a lot of corporations were seeing earlier this year is starting to die off a little bit. So that hyper growth might maybe in the past. But in exchange for that, we're seeing much better concentration on stronger balance sheets. So I think that's really interesting. A lot of people go and say, oh, it's the tech.com bubble 2.0. All these companies, is going to be a huge crash because we've seen such a huge spike. But it's so much different because all these companies that we're seeing now, the massive ones more specifically, are profitable, right? Tesla's now had 5 consecutive quarters of profitability. And everyone keeps pointing to companies like that and saying, hey, they're going to go out of business because they spend so much money. But I think that's just interesting that all these companies that have done super well are now turning into very profitable companies, which is a very good sign for those stocks from Wall Street's perspective.
And I think you bring up a good point, right? Like when we think about the idea of like US stocks, I think most people look at S&P 500. Yeah, that's fine. I think that's a good benchmark to have, but also at the same time, check out NASDAQ this year, right? What Nate's saying is that there's actually a pretty decent difference between the performance for some of these indices. And so sometimes our clients will come and say, I just want to be in total US market. And for someone who's a passive investor, that may be okay, but there's some opportunity there. At least we feel that there's some opportunity there in identifying what's going to be happening going forward. I mean, the consumer essentials 20 years ago is different from what it is today, right? I mean, I don't know if I can really get rid of that Netflix subscription with a 2-year-old at home. If I'm in meetings, I got to put them in front of something, right? And so I think that's the driving factor, is that there's some normalization of what's going on through COVID, and companies are getting used to that. Maybe there's been some cost cutting, Nate. That's maybe why their balance sheets are stronger. And I think just kind of relooking at, yes, historical data is good, but what are we going through right now? Because certainly we haven't gone through this type of scenario for 100 years. So things are different, and your investment strategy just has to align a little bit better than that. Right. So what else? What else are we seeing? You talked about the improved profits, right? How do you actually, Nate, like, I mean, if someone's out there watching, be like, oh, man, I'm still overwhelmed by how I get my news. I want to be, in tune with the market, but sometimes the things that they say, I just don't get it. Like, what would your advice be there? Like, where would I just get a little tidbits just to feel like I'm not completely out of the loop?
I mean, personally, my favorite is CNBC. I mean, their television network has great content throughout the day, but their app is tremendous. I mean, just the amount of articles they put out, and the way that they break it down is really helpful. They have a section, related to real estate planning and investment planning and just general budget planning, and a section for financial planners. Like, the amount of content and the way that they separate it for users to read their content, I think is super helpful. And then, of course, just like any other, investment stock app, you can create your own watch list for particular stocks or funds and get the news related to that. But I think the organization of their content is super helpful, and the way that they write it is really meant for the general population. So I really like their content writers and how they break it down and make it easy, like you said, to understand.
And it has to be, right? It has to be. I feel like I'm actually in the group of people, like, if it's not easy, like, look, I'm not reading Wall Street Journal on a day-to-day basis. Like, people are busy enough that's a lot of deep, like, long sit down read if there's an article that I'm truly interested in. But to be honest, right, I'm looking at the stock app on Apple a lot. I mean, if I have a watch list or some stocks that I'm following, what's interesting is that stock app, you click into that specific Netflix, it'll give you a history of some of the news about that company. It's a very, to Nate's point, organization of content, right? How you consume it. People will talk about YouTube streamers and all about how they do such a great job of providing that content for you to consume. There are apps out there that can make it a little bit more intriguing for you to be able to consume that investment knowledge. And then I find, right, a little bit different than Nate, I agree CNBC is great. For me, on a day-to-day basis, that Apple stock app for me has been amazing to just organize the information for me, right? And
if you're looking for more financial planning content, maybe not lifetime content all the time, I think NerdWallet is a super helpful platform too. I mean, they explain things extremely well, and not only that, I mean, they get paid for doing this, but they have recommendations like, hey, we've just covered disability income insurance. Now you understand what it is. Here are some great companies for you to consider going into work for. Now, again, NerdWallet gets paid for that, but the way that they organize that, I think, is super helpful for anyone looking for financial planning advice that may not have, the same level of access to a financial planner necessarily. And to be honest, even with a financial planner, I still send people to NerdWallet sometimes and reference it myself. So that's a great platform.
I was much as I would say, we were about to just quote NerdWallet in our next segment here, right? And people ask us, like, aren't they competitors of yours? I'm like, look, if they are in the same mindset of being able to provide easy access financial education, we're on the same side, right? Like there's plenty of room out there to be on the same side. And again, NerdWallet is definitely one of those, to be able to provide easy, organized content, right? So go check them out if you have a question after watching these and you want to go there for specific answers, certain recommendations. And just to Nate's point, be aware when you're consuming the content, know that they're getting paid for certain products that are on there. So take it with a grain of salt, but otherwise I think they're fantastic too, right? So Awesome. So our main segment here is talking about moving, right? I mean, even in our internal chats, Nate, we're like, wait, why are we in California? Right? And so, let's go to Colorado, right? So many of our clients have gone there. But what's the driving factor? So let me list it out, right? Driving factor. I don't need to be next to work. So I can be anywhere if I'm, and again, this happens across all types of family scenarios, whether it's a single person, a couple with kids. I mean, everyone's been talking about it, right? And I think, the driving factor is I don't need to be next to work. I don't want to maybe deal with a future commute. I'm going to be remote for 2 years. Let's go see what it's like to live somewhere else. And maybe it comes with tax implications, right? Maybe it comes with the idea that I don't need to pay California tax for 8, 9, 10% of my state income tax. That sounds nice, right? Of course, there's also the housing cost difference. So why don't we dive into a lot of that, right? What are you seeing in terms of companies trying to adjust for their employees working remotely?
Yeah. I mean, this whole decision comes down to 3 different categories, right? It's the income piece, it's the cost of living adjustment compared to where you are versus where you're going, and it's the tax piece, like you said. And early on, I think a lot of companies were just not so sure what the work from home environment would look like, how long it would last. But then sometime around summer, companies said, hey, we just need to get people an idea of what this timeline looks like, because people are making lease decisions. And so we need to get this out. So a lot of companies at this point, at least here, from Silicon Valley and tech companies, tend to be saying around June, July at the earliest of 2021. And so around June, July of 2020, a lot of them said, hey, let's actually quantify what it means to move from California to Denver, California to Seattle, California to Austin. And if you work at one of those companies, you've probably seen this content come out. They're tiering the cities. I think oftentimes New York City, San Francisco is probably going to be tier 1, meaning maximum income potential. And then maybe a tier 2 is Seattle, DC, type of place, and you go down from there. But you're seeing income adjustments 10%, 20%, and in some cases 30% as an income adjustment, depending on where you move. And so some people that decided to move right away in February, March, April, maybe they didn't get that income adjustment, but a lot of companies have caught up to that since.
And I think the article that we saw, right, was just an interesting approach to from seeing, I think, someone did a blind survey talking about part of that, right? That second aspect you talk about, the living costs, and real estate being a big part of that, right? A lot of the survey, what it said, and we'll talk about it a little bit, was that 70% of tech workers living in this area, living in the Bay Area, didn't feel comfortable or didn't feel like they could afford buying a house.
That's wild. That's tech workers, right? They're the ones that are supposed to be making the most money.
Yeah. And well, keep in mind, okay, so the study was done, Nate, like where someone wrote a question. It was a yes or no question sent out to the employees of these tech companies. And it wasn't necessarily that, someone was saying, I looked at my finances, I looked at my budget, I talked to this person and said, could I afford it or not? But what's interesting to me is their feeling. I think that's really what it is, right? It's their feeling that they can't afford. Well, when I read that, I said, I think there's this lack of focus or awareness sometimes about what affordability means, right? I think certainly before you buy a $1.2, $1.3 million home, you might say, wow, that's a lot of money. I don't think I could ever afford that. So I think maybe that's where a lot of that 70% fell. But I would also think, right, like if this is where, again, tying back to our first episode of like making these life decisions from financial planning, when we go into a decision like this and talking about whether you can afford a house or not, it's about bringing awareness about what it means to have that mortgage, what it means to have property tax and maintenance, and thinking about all the what ifs and planning to make you either feel comfortable or not, right? In the sense of like, hey, maybe this isn't the right fit. Okay. And so, and so when I read that, I just found that, it seemed like if there's 70% saying that they don't feel like they can afford it, a lot of that might just not be aware of their situation as well. And that could be a big part of it.
Clients we've had that don't consider RSU income.
Yes.
hey, it's Apple stock. I just get it and I keep it in my E-Trade account and I never touch it. They don't even consider it to be income. It's not even part of their budget.
But sometimes
yet it probably makes up 40% of their income, right?
Exactly.
So I think you're right. I think it's the feeling that based on salary alone that maybe they can't afford it. But having awareness, like you said, and working with a financial planner will help them recognize, hey, you've got bonus compensation, you've got RSU compensation. Yes, you might not get it like a paycheck, but for most companies, it's consistently vesting monthly or quarterly. It's still semi-regular income that you're receiving. But so I think it's the awareness is a good call out.
Yeah, and to your point though, right? Like it's still difficult, okay? Like if you're in a situation where you're single, you're making good income, but you're thinking about buying a $1.3 million property, that still may not be right, like the situation that you want to be in, and that could pose some issues. So, if I look at the content out there to be able to research this, we talked about NerdWallet. Right? They have a great cost calculator to see what the difference looks like in terms of housing, in terms of living. And I think the biggest aspect that we see is the living cost isn't that different. It's the housing cost that makes the biggest difference, or the huge percentage difference.
Yeah, I mean, I think I referenced San Francisco to Arizona for a client just earlier today, in fact. And it was something like a 38% drop. The equivalent of $100,000 earned in San Francisco is the equivalent of something like 62K in Arizona, so about a 38% drop. But when you look at what made up that 38%, I think it was 53% haircut on real estate. So to your point exactly, like not all costs are going to be a linear 38% decline. It's housing is a big cost. It's very common conversation for clients nowadays just to wonder, like for me, I'm born and raised in California my whole life. What would it be like to check out Denver or Seattle? And when would you ever get that opportunity to check it out when you're not risking your job, right? You're just still working from home. And so I think a lot of people are just intrigued by this idea of being able to check out another area.
Yeah, absolutely. And so, I think, for me, those are all important aspects, but guess what? The most important aspect that people are wondering about is still the taxation. Okay. So we've done so much research about this in the past year. I mean, we've learned a lot ourselves about these situations, but the idea that, and by the way, we will use California as a base state to talk about that we're in California as a company, as Diversified Capital, but it could be in a lot of high income states as well. Because if you think about it, a lot of the high income states, they know that they take a lot of state income taxes, and they know that people are trying to get away from that. And so they have rules, not necessarily just days. Okay. It's not about the days in which you might be away from a state. It's about the intent. Like, are you going to come back to the state? Right. And so, some of the base rules to think about here, right? Which is, where are you staying? Where are you intending to leave or live? And where are you sourcing the income? I mean, this is a terminology that you need to be very careful about, because if we're talking about income, you're out of working in Austin for a few months, okay? But you're still, quote unquote, working remotely and sourcing this income from California, and you intend to come back to California, but you're like, maybe for this little bit of bonus I'm going to get this last end of the year, I'm going to move to Austin for 3 months and see if I can get rid of that. Yeah, that's not going to fly for California, because you're still intending to be in California and still considered sourced in California. Now, if it's a situation where somebody is truly moving out of state, I can prove to the franchise tax board or whatever high income state authority that, hey, you know what? I've sold my house. I've got rid of my lease, right? I made the move across the country. I'm settling in here. And even if you may be still working for your previous company, if you can now be in that state for the long run, okay, a year or two, and really show that the intent is there, then California may say, all right, you're truly a non-resident, okay? The tricky part is that company may not have a payroll company in Texas, right? Or they may not be running payroll out of these different states. And so on your pay stub, we've seen a lot of cases where someone actually did move. Someone did actually make the transition and are no longer in California, yet their pay stubs, the HR didn't know, or they told, they failed to mention that they're no longer in California. They're still withholding California state taxes. I'm not saying that that still ends up being taxed in California, but it poses an issue because that was already withheld to California. And now you need to file a tax return that says, look, California, I'm not actually here. Please give me my money back. That's a lot harder to do than had they not withheld. So if you are in the scenario where you've moved, but you notice that your pay stub is still California, you may want to go talk to HR and say, why is that the case? Can you remove it? Right. One other thing to think about is the stock or equity compensation that you may be receiving. Okay. That's really important because when you're talking about source of income, it's about when you earned it. Now, earning that income has to do with your vesting schedule a lot of the time, okay? And so there may be situations where you're at a company that is private, you're not actually immediately taxed on some of this stuff. I won't get into too much of the detail, but it was earned while I was working in California. And then I moved, let's say I moved now, and then in 2 years later, the company goes public. You might be surprised that when that happens and the tax hit comes, they take California tax. You're like, what's going on? Well, it's because when you were in California, they considered that as earned income just because it wasn't paid yet or realized yet. It was still sourced there. And we're seeing a lot of that, especially this year, especially with the amount of companies going public, Nate. We're seeing that happen a lot, right?
Yeah. And I mean, people move all the time, even without COVID. So yeah, I mean, that's been a huge wake-up call for a lot of people this year, and just getting used to having to file multiple state tax returns to clarify that. But I think you make a great call. I now obviously be careful of underpayment penalties, but I would prefer to be in the camp of having to then pay California as an example, as opposed to hoping that California pays me back from clarifying my tax return. So, not to say you should withhold nothing for California. Just be cautious and make sure you're alerting your HR as soon as possible.
Exactly. Like, you just don't want to be in a situation where you are in the right. Like, you don't maybe need to pay California, but all of a sudden you still need to file that California return, make an argument, right? Now you've had something on paper where they said, oh, okay, let's double check this, right? And so, and these are things that your tax preparer should be very aware of, that, once you move, your HR should know, your tax preparer should know, right? And planning, I mean, with our clients, we're planning ahead of time, thinking about if we move, what's going to happen, right? And I think that's really important, is that prior planning to the move and understanding the implications and then doing it, versus doing it because you think you're not going to owe taxes, when in reality, right, because of all the difficulties I just stated around your residency and the source of income, you might still owe, and then it might change your decision about moving, right?
And just one more call out. I mean, not everyone makes several $100,000 a year. So be mindful of just the practical cost of moving.
Yes.
Right. If you're going from one half of the country to the other, you're probably still talking a $10,000 move one direction. And then if work comes back online and you have to go back to the office and move it back, now round trip, we're talking possibly 20K. Are you really going to save enough taxes and cost of living to make that cost even break even? So maybe that answer is yes, but it's just something to be mindful of.
Absolutely. So, and there are, plenty of arguments out there that income tax is just one of the taxes that somebody pays, right? And so there's income taxes, there's sales tax, there's property taxes, and if you should factor all of that in, and it's going to happen with different magnitudes, right? If property tax is much higher in one state, but you don't own a property, may not be a factor, right? But it is a total liability, a total tax liability that somebody pays, not just the income tax. Although everyone wants to talk about the income tax because maybe it is the most relevant and the biggest number, but there are other aspects to be thinking about in terms of overall situation, right? Awesome. So I think that covers it for this segment right here. It's something that we've been wanting to share with people. We've been just getting so many questions, and I think we are at a tail end, or not tail end, at a time in which we've been in the shutdown now, maybe some reopening, but a lot of people are thinking about what to do next. And I think that's where this comes in, to take in the financial aspect as well as the social aspect. Like, okay, I need to go somewhere different and find some more space, right? That's all part of the decision process.
Yeah. So just to summarize, I mean, check with your company to see if there's a localization of your salary on that new place that you're considering to go to. Check NerdWallet. Just do a quick NerdWallet cost of living Google search, and I think you'll find the tool that we use all the time to see what is that cost of living from one place to the next, and then see the tax difference, and maybe hopefully run through just a quick back of the napkin calculation to see if you are saving any taxes.
Absolutely.
But going through all three of those, I think, are a very necessary step before you make your final decision.
Awesome. Thanks for the summary, Nate. Thank you guys again for joining us on another Dfi-nancial Friday. We're looking forward to bringing more content like this to you guys. All right. If you're looking for something that's just objective, it's educational, straight to the point, just me and Nate chatting, really, right? I mean, and I think that's something that we enjoy doing, and we really hope to keep this as informative as possible for you guys. And so again, leave us some comments, right? Share with us your feedback on this, and let us know what you guys want to hear next, right? As we build out a roadmap for our show, we're excited to do so, and we're excited to continue this going forward every Friday at 3 p.m.
Awesome. See you next week.
All right. Thank you, Nate. Have a good one.